Hello everyone, welcome to the channel. Let's do a weekly narrative of Nifty like how we do on every week. So, first things first, it's ideal that no matter what strategy you use, no matter what indicator you use, no matter whom you follow during live market hours with respect to live YouTube channels or live Telegram channels, calls, and all that, it is very important that you maintain good psychology of market within yourself first, because market can give you lot and lot of fake moves. Market opened gap up on Friday and started moving up. What did I say? Like is if we get closures and sustaining above this range, then only I'm interested in call. I gave a message to the members whomsoever has taken my course. I started the channel as promised, and what I had given as a indication for them is if we get the market back in this range, then we can plan to look for a short targeting the gap. But market did not come here. Market just went up, did not come to the supply, and then started to falling down. It's okay. This is part of market. If our setup doesn't line up, we should not trade. That is a mindset you should always have. We see that there is a tiny bit of imbalance here. Very small gap which is there, and from weekly perspective we see that the market is bearish, meaning market has changed the character from being bullish down to being bearish. We see that one more point, that SGX Nifty currently shows 300 points gap down. We need to consider all of this. See, regardless of what SGX Nifty shows, we don't know what will happen today or till tomorrow morning. Okay. If market opens flat, if market opens gap up, if market opens gap down, we'll take all these considerations when we do this narrative. So we have marked this swing point high and we have marked currently this swing point low. Okay. We see that immediately we have a demand as part of small gap. Immediately we know that this is going to be our ideal setup if market gives a positive reaction from this particular demand. We see that there is a gap here. Market can start to push up. This is one scenario. Okay. If market breaks this particular demand and sustains below this, we can see some kind of a reaccumulation here before driving the market even down. I'm not saying market can go all the way till 19,000 or 18,000, nothing of the sort. But if the news related to war continues to be negative, and if the damage continues to be more, then we can see a pretty big downward rally, which is going to happen maybe in the coming weeks. If market, any kind of positive news happens in the market, little bit of positive news also happens in the market, we can see the rally happening all the way at least till 24,000. 1,000 points upward movement is possible in this coming week, and 1,000 points downward movement is also possible in this coming week. It doesn't mean that we should carry forward any position. We should not blindly buy call or blindly buy put, nothing of the sort. This is just an analysis which we can derive from a weekly perspective. Okay, so then we go to daily perspective. From daily chart also, it is very clear that market is steadily coming down, meaning market has changed the character here, did a retracement, came down again, did a retracement, came down again, did a retracement, and coming down again. Now, if it does a retracement, we will be interested to take the market down again. This is going to be very clear. So, can this retracement be captured? Yes. Can this pull down be captured? Yes. Both of these moves can be captured. That is what I was saying. If market opens gap down, if this kind of favorable position happens, we can see an immediate target at least till this gap to be filled, meaning 23,600 can be your upward range, which we can expect market to be filling it maybe Monday, Tuesday types. If Tuesday's expiry is going to give one-sided movement, then this range also can be broken and the next possible gap can also be filled. See, anything can be possible in the market. It all because currently market is moving in a news-based fashion. This is going to be all extreme volatile moves. And I got a question from one of my people who has purchased the course asking, sir, which strike price should I choose? Because market is Indian VIX is very high, and because of that, the at the money prices are also very high. So, sir, which strike price should I choose? See, if you know that market is giving you a positive reaction from a demand, and you know that there is a supply which is marked somewhere around 23,600 being marked, and if you are sure that the market momentum is good, if the positive reaction is good, if the confirmation is good, then you can choose somewhere between 23,550 to 23,600, even though the market is at 2300. Same applies to downward direction. If market is coming from a supply, and if you know that there is a demand at 22,800 or 22,900, then if the market is currently trading at 23,500ish range, then you can choose the strike price of whatever the demand you are targeting to. See, in this way, the movement will also be there, and although the movement will be little slow because it is being out of the money, this will make sure that you can hold your trade till the point your target is being reached. Okay, I'm not saying like you should choose always out of the money. I'm saying when the VIX is higher, this is how you should trade. When the VIX is lower, then you can choose at the money or in the money contract where the movement will be very good. Okay. Okay. So moving on, let's go to 4 hours chart. Yeah. So from 4 hours chart also, it is very clear that there are relative equal lows being formed in the market here, and there is a demand setting below. So what we can expect from the market is if market opens flat, comes down and sweeps today's high and then does a pullback, we can expect the target of 23,600 and even a little bit higher till 23,750 being met on Monday itself. But this should happen market opening flat, or market opening slightly gap down and pushing up, or market opening slightly gap up and surviving above there. Surviving meaning it should wait till market for 10 o'clock, and if the market is trading above the price of its opening and the momentum of the buyers is little stronger than the sellers, then it is very possible that the upward momentum rally is going to happen. Okay, so this is for the upward side. And what if market opens extremely big gap down, like how it is showing in SGX Nifty? So if the market opens extremely big gap down, like 300 points or 400 points down, somewhere 23,800, we need to again wait and watch the price action. Okay, and if the price action is continuously going and making lower highs and lower lows, then on small pullbacks we can easily target till this lower range of 21,800. See, 22,000 is a psychological number. Okay, we can expect a bounce from 22,000. Same applies for 23,000 also. If market opens below 23,000, then there is a high possibility that in the coming days 22,000 can be easily met. These are the various possible scenarios which we can derive from the current market structure. If you are really interested to get live market calls, please check out the course description which is being mentioned in the description of this video. If you really wanted to study and improvise yourself, I will add you into the private WhatsApp group wherein I will give you the view of the market on how you can take up trades better. So thank you so much for watching. We'll meet in the next education video.